What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw more volatility in the stock market and we're still getting this whipsaw, and the question is, do I still think this is going to be a bear trap? So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 0.87% and we definitely are still getting this high volume whipsaw and plenty of volatility, and that's to be expected when the VIX is remaining above 26. So stay nimble and make sure you have plenty of cash and that you're not getting too risky in either direction. But yes, I still do think this stock market is going to end up being a giant bear trap. So when I tell you that I think it's going to be a bear trap, I'm not worried about the day-to-day whipsaws because those are still going to be a thing as long as the VIX is above 26. What I'm talking about when I say a bear trap is right now there's a lot of people that think the stock market is about to do this and just start crashing down and go through some major correction or possibly even a stock market crash. And they're loading up long short positions, meaning that they expect this to happen over the course of the next few weeks. And they still think that the stock market is going much lower. I'm not saying for sure that that's wrong, but I do think this is all going to end up being a bear trap, meaning in the long term, I think we are going for this next leg higher. So when I say bear trap, obviously if you're day trading, you could make money in either direction. And I do encourage you to day trade. If you're good at it, you can always short at resistance and cover at support and go long at support and cover at resistance. And that's completely fine. Not everybody has the time to day trade and not everybody can sit at their computer all day and watch these levels. So the number one thing I need you to pay attention to is whether or not we lose this critical support level, because if we don't lose critical support, this is all a bear trap and we're going higher for another leg higher to finish out the Santa Claus rally. I still think it's possible we see that Santa Claus rally, and this is the preemptive pullback before we get that rally higher. Remember, the stock market depends on liquidity, and the best way to get liquidity in this market is to flush and scare out all of the retail out of their long positions, free up the opportunity for the stock market to go for that next leg higher, and I do think that's exactly what we're getting. So right now, I told you the stock market is very simple because there's only one level you need to pay attention to, and that's going to be the SPY level at 450. If SPY starts closing below 450, then this was not a bear trap. I was wrong. I will own up to it, and we're going through that full-blown correction, and we're going to close these gaps below at 447, 442, and likely 436. However, if SPY cannot close below 450, this was a bear trap and we're going back on the bull to finish out another bull cycle, and we're very likely going to see a new all-time high. So I still think it's a bear trap until the price action proves me wrong, so wait for the confirmation and closing price below 450. A lot of people thought the price action was breaking down below 450 today, and as you can tell, it was just another trap because we closed all the way back above 453, which is one of our critical support levels. However, the bulls really need to start flexing their muscles and they need to get the price action back over this 50 EMA at 456. So the critical resistance level for SPY will be 456. If the bulls can get back over 456, they can start taking the stairs up. And remember, the bulls do take the stairs up. So we're looking for the bulls to try to break back above 456, work their way back above 462, and then start closing back above the 20 simple moving average, which is going to be right around 464. Once the bulls get back over 464, then we're very likely back on the bull and we're going to those new all-time highs. Not any sooner, so remember that we are in a downtrend in the short term until we're not, because we still do have this downward trend where we're forming lower highs and lower lows. So while I am predicting this will be a bear trap, you still have to watch the price action. Watch for the breakdown below 450 to confirm that we're going lower, and the breakout back above 456 that we're very likely going to continue to go higher, but we won't know for sure until we get the confirmation breakout above 462 and 464. Respect the volume because we still have plenty of high volume, but the good news is that we did get a high volume buying day just yesterday. So there's definitely bulls out there buying the dip, and that's more and more likely if we continue to see high volume buying, that it is more and more likely going to be a bear trap in the longer term. So stay flexible and stay objective. If we break below 450, it's going to be very hard to remain bullish until we close the rest of these gaps. Jumping over to the NASDAQ 100 triple Qs, again we saw a very high volume day and we did see a selling day going down 1.74%. So like I always tell you, be cautious when you see high volume selling, and we did close below one of our critical support levels by closing below the 50 EMA, and we did close below 385. Now normally I tell you to wait for 2 closes below a critical level, so I would like to see confirmation that we're going lower by seeing the triple Qs closing below 385 for a second day in a row, which we will see as soon as Monday. Remember, we do have this other critical level that I want you to pay attention to, which is right around 383, and we did close above that critical support level. So overall, the bulls are still holding one of the very critical support levels right around 383. The other thing I want you to pay attention to is that it does look like we went up here in 5 waves, and anytime you go up in 5 waves, you usually are due for a corrective move, and it's normally going to happen in a 3-wave structure, and you can clearly see we are getting this 3-wave structure, which is called an ABC lower. This ABC doesn't have to end where we are currently at. It could go lower, but I do want you to know that this wave C is meeting the criteria to complete a full-blown correction. It's not necessarily the full-blown 10 to 15% correction, but it is a very normal pullback, which could mean we go back on the bull from here. So stay flexible, and the critical support level on the triple Qs is 383, and you'll know we're very likely going to continue to go lower if we start closing below 380. We still have strong support at 374 and 370, but again, you're looking for early warning signs that we're going lower. It would be the close below 383. Now to the upside, we want to see the triple Qs bulls proving it by breaking back above this 50 EMA at 385 and eventually working their way back up above the 20 simple moving average, which is right around 395. So your critical breakdown level is closing below 383, and your critical breakout level is getting back above 395. Again, if this is an ABC correction and we're going back on the bull, we're going to know that very soon, so look for that possible price action. Jumping over to the Dow Jones, you can see the Dow Jones didn't really go down that much today, only going down 0.11%. And again, we did see very high volume, so we see a lot of buyers and a lot of sellers, but we really didn't go anywhere. We're still closing below the 5 EMA, so we need to respect that, and we still have a huge gap to fill above at 356. And as you know, gaps do get filled. It's not a matter of if, it's just a matter of when. So right now on the Dow Jones, the only critical level I care about is a close below 338. If we close below 338, we're going through a much deeper correction and possibly even a bear market. To the upside, we want to see the Dow Jones getting back over the 50 EMA, which is now at 353, and we're looking for the full gap close at 356. Getting back over that 20 simple moving average will also be above 356, and then we could see the Dow Jones going back into another bull cycle. Remember, it's a downtrend until it's not. I'm just giving you possible scenarios to pay attention to so that you can know exactly what you're looking for to know that this downtrend is likely reversing. So look for that confirmation breakout back above 353 or the breakdown below the critical support at 338. It's really that simple, and yes, it is a wide range, but when the VIX is above 30, you need to respect the volatility because you are going to get wild swings, and that's why it's called a whipsaw. Support levels on the way lower will be right around 344 and 341, and resistance on the way up will be right around 350 and 353. Jumping over to the Russell 2000, you can see that we were down over 2% today, and we did bounce off of that support level at 213 intraday yet again. Remember, 213 is an extremely critical support level for the Russell 2000. If we break below that, we could see the Russell 2000 going into a full-blown bear market. However, you need to look at the glass half full because we still have a gap up here that won't get filled until we get back up to about 229. And we know that gaps do get filled. It's just a matter of when. So are we going back up there to fill that gap after bouncing off 213 for the second time? Only time will tell, but it will be more likely if we see IWM breaking back out above 221 and 222. So look for that breakout level to close the gap at 229. And if we can get back above 232, IWM is very likely going back on the bull, and we could still see a brand new all-time high before the end of the year. Don't get overly bullish until we get the breakout above 232, because it is still possible that we just close the gap and then continue to downtrend. As you can tell from the trend line, that gap would likely get filled right around December 9th to December 8th, which does mean it could get filled next week. So don't rule out the possibility that we see a very strong bounce next week, and the Russell 2000 is hinting that that is coming. On the Arkk ETF, we were down over 5.5%, and it still looks like Cathie Wood is having a terrible time. We broke down below that support level at 94, so the next support level is right around 91, and we need to see Arkk breaking back out above 107 to try to reverse this downtrend. This is what a waterfall wave of selling capitulation looks like, and this is definitely a falling knife that I don't suggest trying to catch. Wait for a confirmation breakout back above 107 before you get bullish on Arkk, and as you can tell, it is in a full bear trend, so don't be afraid to be a bear in the Arkk ETF and short at resistance. You have resistance now at 99, 107, and 114, and we will need to break above all of those levels and start forming higher highs and higher lows to reverse the bear trend. On the VIX, we were up over 9.7% today, and we still see the VIX looking very concerning, staying above that breakout level at 26 and continuing to see very bullish closes. The VIX is in a full bull trend and it's not playing around, so this is definitely going to remain a very volatile market. That doesn't mean the market has to go down in a straight line, and it does mean there will be volatile swings in both directions. As long as the VIX is above 26, you need to be very disciplined and you need to have a very solid trading plan. If you fail to plan, you might as well plan to fail, because this is a very volatile market, and if you don't know what you're doing, you're just going to get whipsawed and absolutely wiped off the face of the earth. So as long as the VIX is above 26, you need to be very cautious, and we really need to see the VIX getting back below 20 before we can say that we can go back into a steady bull trend. Jumping over to Bitcoin, you can currently see that Bitcoin is testing our critical support level at 53,000. So we are about to see a very critical level getting tested. Remember, if Bitcoin starts closing below 52,000, we're very likely going through a much deeper correction or a very prolonged sideways market. So if you're bored this weekend and want to try to guess what the stock market's going to do next week, just watch Bitcoin to see if it can stay above 52,000. If it closes below 52,000, that could mean we're going to see the full-blown stock market correction, because that means we're going into a risk-off sentiment environment. However, if Bitcoin could get back over 60K and bounce off of the support level, that will be a bullish development, and that does mean the stock market is probably done pulling back and we're going back on the bull. So watch those critical levels on a breakdown below 52,000 or a breakout above 60,000. Everything else in between is just a trading range, and I don't think it has any significance. On Amazon stock, we were down 1.38% today, and we are starting to close below our critical support level at 3,400. So it's very likely we're about to see Amazon roll over and start coming back down to 33.11 and possibly even 31.85. At this point, Amazon needs to get back above 34.55 and then start breaking back above 3,500 to possibly go into another bull cycle. So right now it clearly looks like Amazon is rolling over and getting ready for more legs lower. So watch for that critical resistance at 34.60 and the critical breakdown level below 3,400, which we are starting to see. On Tesla stock, we were down just over 6.4% today, and we did break out of the consolidation wedge to the downside, so the bears are now in full control. Remember, the breakdown level was below 1080, and now you need to watch a strong support level right around 1,000, which is also our 50 EMA. At this point, the bears are in full control, so if they can break down below the support level at 1,000, you're definitely going to see the gap getting filled right around 908. If that gap gets filled and we continue to go lower, you're looking for the next gap fill at 843. However, if the bulls can make a stand at 1,000, that means this is not over with yet, and the bulls are going to try to come back up to this resistance level right around 1090. If the bulls can get back over the 20 simple moving average, we could make another attempt to break out, and the level will be right around 1155. On a break above 1155, you're looking for the gap close at 1208, the breakout at 1240, which means we could be going to the next price target at 1400. But right now it looks like the Tesla bears are in full control, so don't get overly bullish on Tesla. Now that we have broken out of the consolidation wedge to the downside, you need to be a lot more cautious, and you're more than likely looking for another lower high before we break down through support and go down to fill that gap. Anything is possible, so watch the price action and make sure you're paying attention to the critical breakdown and the critical breakout levels that I just got done giving you. On Apple stock, we were down 1.17% today, and we closed right on top of support at 162, and we still have a very strong bull trend. So Apple stock looks like it's not ready to just roll over and die, holding on to that very strong bull trend, which is definitely going to be very bullish for the rest of the market. If Apple can bounce off of support at 162 and start trending higher, it could try to get up there to that price target at 171, with resistance on the way at 166 and 168. To the downside, we could still come back down to critical support at 157, but if we break down below 157, we're more than likely going to see the full-blown correction in Apple stock, so look for that bearish breakdown below 157. Overall, this still looks bullish for the time being, but obviously everything is subject to change, so watch these critical levels and watch the price action. On the financial sector, we were down just over 1.6% today, and we still see the financial sector looking very weak, like it's rolling over and trying to die. However, if we see the financials getting back over the 50 EMA, we could close that gap above and attempt to do another bullish breakout. Otherwise, for the time being, continue to expect more downside until we see the price action looking a little more bullish. On the industrials, we were down 0.12% today, and we see the industrials looking a little better than the financials, closing back above the 5 EMA for the second day in a row. The next step for the bulls will be getting back over that 50 EMA and closing the gap above. The healthcare sector was up 0.18% today, closing just below the 5 EMA and getting rejected around the 50 EMA. So we need to see if the healthcare sector can get back above that 50 EMA and try to go back into another bull trend. The energy sector was down 0.79% today, closing back below the 50 EMA and building up a lot of bearish momentum. So it does look possible that the energy sector could be going for another leg lower. However, continue to watch that price action to see if it can get back over the 50 EMA. So jumping back over the S&P 500, you can definitely see this is a very volatile market. And if you don't know what you're doing and you don't have a plan, you are going to get absolutely destroyed in this market. It's called a whipsaw because it's going to swing wildly in both directions. So you need to make sure that you understand the critical levels and that you're following the price action. There is no substitute for following price action. And if you're just looking for somebody to tell you that it's going up or going down, you're just going to get destroyed because nobody knows exactly where the stock market's going. You simply follow the price action and you understand the highest probability chance in a macro level bull market is that you're going to move in the direction of the trend once you bounce off critical support. So right now we still have a bull bias in the macro level, so we want to watch critical support to see if it can hold up. If SPY cannot break below 450, don't be surprised if we go back into another bull cycle. It's that simple. If you overcomplicate it, you're not going to know what you're doing and you're going to end up with huge losses in this very volatile market. So don't trade if you don't know what you're doing and you don't understand how to navigate a volatile market. Also remember that I do have bank trade alerts, which is very good at navigating volatile markets and does very well in volatile conditions. I still do have that 67% off promotion code for your first month, and now is the best time to try bank trade alerts with all of this volatility. Bank Trade Alerts is algorithm-driven alert service that sends you all of your buy and sells directly via email and text message and only trades the ETF GQQQ. You can find out how to get the 67% off your first month and how to join Bank Trade Alerts by clicking in the link below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade, and I bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.